Hello children, welcome back. This is one more video on ratio analysis. Yes, we are in the last set of ratios, the profitability ratios. And today we are going to do the fifth and sixth ratio in this, and we'll be left just with one more. Earning per share, EPS, as it is, famously, the short form is there. So now net profit after tax, meaning the final profit figure that we get from a statement of profit and loss. From there also we subtract the preference dividend. Preference dividend, you understand? The share of profit which is given to preference shareholders. Alright? They are always having a fixed rate of dividend that is written in front of that type of preference shares, like 8% preference share, 16% preference share, or whatever. And that percent is the fixed rate of dividend that they carry, the preference shares. Okay, so that dividend also, if we subtract, what profit are we left with? We are left with that profit which is available to be distributed to equity shareholders. You all understand or how you know that always, the order is first preference shareholders will get their share of profit, and then what is left out of that, the equity shareholders will get their share of profit, right? So therefore we need to subtract this preference dividend from the net profit, and then I divide that with the total number of equity shares. Therefore I get the share of profit that is available for, mark you, available for the equity shareholders, meaning per share. Alright? This will obviously come in rupees because we are talking about profit divided by number of shares. So how much is the value of, or you can say the share of each shareholder in the profits. Here it is not dependent on, and it is not mandatory for the company कि जितना profit बचा है सारा distribute कर दे. Obviously it will keep certain reserves and other things are there. But this is what is available for distribution for equity shareholders. Alright? So that is what we are finding. The earning per share, the higher the number, the better. Isn't it? If you are an equity shareholder, what would you expect? You would expect that I get a lot of returns on my investment. So higher is the earning per share, higher is your, the better is the share, better is the performance of the company, right? Now preference dividend is calculated by rate of dividend into preference share capital, alright? Just for information, I think you already know that. Now number 6 is price earning ratio. Price earning ratio. Price of what? Equity shareholder. Earning of what? Equity share. We're trying to compare how much do you have to pay to buy an equity share which earns this much per share, meaning the EPS is this much. Okay, so we're trying to find out how many times you are investing in your, the market price of an equity share divided by what is the future probable earning also based on the present earnings. So that is obviously number of times. Price earning ratio is expressed number of times. Now here, if it is very high, the price earning ratio, see basically who requires this ratio? A probable shareholder. Shareholder who is planning to invest in certain shares for a long term. So he would like to see that how much money do I have to spend that, spend on purchasing that share and how much returns I will get. Okay. So here if we suppose one company A has got 10 price earning ratio, meaning you have to invest 10 times that of what you will be earning per share. And suppose there's a company B where the price earning ratio is 6, meaning you have to invest only 6 times of what you're going to earn in the future. So obviously the shareholders would judge on this basis also the future prospects of the company, the amount to be invested. Alright, so this is basically reflecting the expectations of the shareholders. Alright, so these two are related ratios. So therefore we have taken one common sum here to understand both of them. 6% 6% preference share capital is 5 lakhs. Equity share capital is 10 lakhs. And how? 10,000 equity shares are there of 100 each. Fine. So this itself gives me 10,000 shares, gives me the number of equity shares. Always there is one slight scope of error here, that many children take this equity share capital here by mistake instead of taking number. Number is something, this is the amount. We are not talking about equity share capital here, we are talking about number of equity shares. So please take 10,000 by calculating that. Net profit before tax. Before tax is 2,50,000. Therefore, tax, after tax, if we have to calculate net profit, I will have to subtract tax. 35% of the profit is to be subtracted, right? Market price of equity shares is this 150 each. That will be required for calculating price earning ratio. But for now, can we just find out EPS till here? If we see the information till here, tax rate is given 35%, profit after tax, before tax is given, so I can find out profit after tax. Then from here I can subtract the preference dividend, which will be 6% of 5 lakhs, 30,000, correct? So let us see here, 2,50,000 net profit before tax minus tax, I get net profit after tax. From there I subtract preference dividend, I get preference, net profit after tax and dividend, which is my numerator, right? And therefore I get EPS by putting these figures in the formula. Rupees 13.5, rupees, please mention, okay? 13.25, again rounded off to 2 decimal places. This we have got. What do I do with this information? Equity dividend paid is 25%. I told you that dividend, this is the profit available for shareholders, but this much the shareholders might not be given as dividend, okay? So this 25% shows that 25% of the profits have been given away as equity dividend, right? But that is irrelevant for me. I don't have to find out that. I just have to find what is the profit available for shareholders, which I have already found out. Therefore, this information is redundant, it's not required. Interest on debentures. Interest on debentures का क्या करना? Of course, profit before tax must have been calculated, after deducting this interest on debentures, because this is a charge against profit. Still it is given here. Of course, I do not have to do anything about it because, yes, it is obviously taken care of while calculating net profit before tax. It did not say before interest. Did it say that? No. Therefore, this must have been subtracted. So, I leave these two which are not material for this sum. So, also you need to be very clear in your fundamentals, children, and when you are doing ratios, so that you do not get confused with, this extra information that you will be bombarded with. Alright? So, EPS is done and price earning ratio is market value of each share. 150 is given there. Divided by EPS. So, 11.32 times, meaning whatever you are expecting to get, you have to invest 11 times in your purchasing of that share. Alright? So, I hope this one is clear and not too much of complication in these two ratios, simple accounts and simpler with me. Thank you so much for watching. Do practice more sums. Take care. Bye-bye.